Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously, create dozens of quick lists, display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're September 9, 2015, a Wednesday. Today it's going to be a show that's going to be really interactive, so I definitely count on you guys to participate in the show. I want to have your opinion, what you think. The question bar is open there, so if ever you have any questions, feel free to ask them. Today the markets made a false rally, I would say. All indices did, and the reason why all the indices rose at opening, it's on China. What the Chinese government has done is, first of all, they say that they will try to ease the tax laws. They will make sure that to stimulate growth, that they will increase public and private partnership. And today the Chinese government announced that they will change the way to calculate their GDP, because the second quarter GDP reading shows that the Chinese economy grew by 7%. So encouraged by with the measures adopted by the Chinese government, we had here the Nikkei index, which rose by 7.71%. That's the biggest rally since 2008. So it's definitely something that investors feel encouraged about, but so far those are only words about the Chinese government. No official measures have been adopted yet. They just say that they're working on it, so it's only a rebound that have helped the American markets and also the Canadian market to start a slight bullish cycle. Not a bullish cycle, sorry, to allow some sectors to start a bullish cycle, but the markets, the indices, continue to stay stuck within their neutral range. So it continues to remain a market that is tough, a market that is in terms of the entry points, they're hard to determine because most stocks have not stabilized enough before confirming a new bullish cycle. So we definitely don't have a lot of breakouts. For instance, if we take a look at MarketGurus.tv here, look at on the TSX, we only have 2 breakouts. On Venture, none. On NASDAQ, only 5. And on New York, only 7. So that definitely shows you how low is the number of buying and selling signals today on the markets. Concerning the resources, we still have the resources that continue to stay flat, such as oil and the energy stocks. Some stocks right now are putting some are staying neutral, but some of them were putting some pressure on their support to finally get back within their neutral formation. ARC Resources is an example of that. paid to exploration continues to stay neutral. The sector that is more at risk is gold. Gold is actually is reversing its support. So the thing is on gold is that right now gold could reach 103. So for bearish ETF on gold, this is the target that you have, 103. So HGD, GDST, those are some great bearish ETF. But for the gold sector, we still see that the sector continues to stay at the support, unable to break it down, which makes right now the quality of those of the bearish signals that we have in the gold sector not as impressive. Of course, there are a lot of stocks that are at risk. We have a stock like Precharm Resources that if it goes below 650, that will be a breakdown. Dator Gold, if it goes below 1261, that will be a new breakdown. Oceana Gold, if it goes below 224, but look, there's another support that's there at 214 on Oceana Gold. Franco-Nevada, we could say that the stock is starting a breakdown. It's a short. However, look, the other support is at 51.47. So you don't have a lot of potential if you're shorting a stock like Franco-Nevada, because at 51, which corresponds to a support, this is where we're going to have a pause. So from 54 to 51, it's not even 5%. So those are really the conditions that we have right now on the gold sector. This is why I would favor to get in with some with the bearish ETF on gold instead of shorting the stocks. Now, do we have appropriate timing to open some positions among bearish ETF with the market that is showing some weakness? So far, I don't think so. We have just erased all of today's gains, but nothing says that during the day we might not have another rally. If ever we go down, the thing is that I'd like to see at least all indices going lower than their former resistance of yesterday. So far, it's not the case. The former yesterday's resistance corresponds actually to a new support on most indices. This is a new support. So this is actually a point where I would like to see investors selling their stocks to confirm the entry point among some bearish ETF. So what we're going to do, I'm going to put the document sharing button. You're going to have a list of some bearish ETF and also the opinion of some Fed members, because next week we're going to have the FOMC announcement concerning the rate hike. So as I said, you have the list of the bearish ETF. You also have a document of what the Fed members think, what's their opinion concerning a rate hike. Mostly people, Fed members who actually have a voting right, said that they will prefer to keep the status quo, and non-voting members want to see a rate hike. So it's really some divergence there. Now let's take a look at some news here that we have. We have some news on Quicksilver. They're going to declare bankruptcy today. Vitae Pharma, that stock is our day trade of the day. Really at least 3 entry points on a stock like that, 95%. It's because they completed successfully phase 1 for their drug. And Akebia, they also obtained some success for the drug. Macy's, they will partner with Best Buy, so Best Buy will put some of their stores in a Macy's, so that will cost their rental cost, and Macy's will also sell or close 30 to 40 stores, 35 to 40 stores. Apple, they will launch one of the new product today. We published an article on our Facebook page saying that the hits and misses of Apple. So I advise you to take a look at this, because today Apple has a new product that they will launch. And concerning the Canadian side, in terms of the news, we have Orbit. They say that they will buy back some of their debt of 2012 for 25 million almost. Goldcorp, they cut their production at their project in Quebec, Eleanor Mines. BlackBerry, well, there's QNX System, the CEO of QNX System. It's a subsidiary of BlackBerry, but the QNX System, the CEO of this division has left. In QNX System, it's important because that's actually the backbone of the exploitation system for mobile, for the BlackBerry device. Bombardier, they refused buy offer of $7 billion from a Chinese company, and that confirms that Bombardier is definitely reluctant to sell their rail unit division. They want to at least keep some sort of control. but the Chinese company was offering to buy 100% of it for $7 billion. Crew Energy, they sold some assets to get $50 million. Capstone, they also suspend some of their projects in Colombia. And Quebecor, they announced today that they will buy back their remaining stake in Quebecor Media for $500 million. And Bank of Canada, they kept their rates unchanged. So that didn't create any volatility at all on the markets. We continue to have markets that remain totally neutral. Now, there was one question here from Anne. Why don't you use the Japan candles in your analysis? Well, I don't use Japan candles analysis. It's mostly a matter of preferences. I think it's clearer when I use those type of charts, but I'm not saying one is better than the other. Of course, the Japan candles, there's some things that you can see with them that I cannot see with my current graph, but it's mostly a matter of preference. Now Rick here has a question. Mark has a question, but the question is about Rick. So the questions is Rick. Oops. Okay, Richmond Mines, is that a buy? Well, no, it's not a buy. It's a clear stock that's confirming a bottom. Yes, indeed. However, the thing is, it's not a buy because there's some buyers who are coming in on that stock. It's testing a bottom. Oof, I would be tempted to say it could be a buy, but man, I'd like to see a clearer confirmation. I want to see the stock breaking 344. If it doesn't break 344, that's not a buy for me. So it's neutral. I don't like the fact that volumes have been declining. I'd like to see 344 breaking out. That would be a buying signal for me on a stock like Richmond Mines. But so far, even if it's testing a bottom, I would not feel comfortable to get into that stock right now, as long as it stays within its sideways formation. So that was Mark's question. Now, folks, what we're going to do, we're going to take the survey. I prepared a survey for you guys. So during the break, we're going to pull a survey, and I would like you guys to just answer that survey, and when we get back, we'll actually have the answers from this survey.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
Let's take the look at the survey questions here. So are you trading on the stock exchange? 83% say yes. So that means that most people who watch the show do trade on the stock exchange. Now, are you trading using a mobile phone or a tablet? Most people say that they either use one of them, so it's good. I see that our audience is mostly connected in the sense that they use either mobile phone or tablet, not their laptop. And now, are you watching our shows using a mobile phone or a tablet? Most people say no, so they prefer to watch it either through their laptop or the computers. So it's actually good to know that. So thank you, folks, for answering those questions. And there's one last for this survey. Sorry. Now there's one question here from SF. Hi, do you think it's a good time to buy Apple? Well, let me tell you something here, SF. Apple is in a nice technical situation there. Look, we're just at the testing this upward trending on Apple. This corresponds to a support that seems to be solid because investors are reluctant to let the stock go down. Now, the thing is on Apple, look at this. we have some sort of a bullish divergence in the sense that, look, when the stock was over here, the histogram was actually lower while the graph was higher. So that is a clear bullish divergence on Apple. So that means that there's a possibility that Apple could pursue its rebound. Now we see here the stock is totally neutral. We have a higher bottom on the 933 stochastics, which is also bullish on Apple. So I'd like to see the stock breaking 115 to be a buying signal. But if you're buying Apple, willing to get out below 105, which corresponds to this important support, and which will be the reversal of this important upward trend, then be my guest. It's okay. Now, if you're buying right now Apple, you're betting that their products will create a success in the future. So this is something that you also have to watch to see how the sales for the new product evolve with time. So this is something that you have to take into account definitely. But for me, Apple, technically speaking, on MarketGurus.tv, we would put it at 115 and higher as a buying signal. So that would be the signal. Now, how much turkey stuffing does China think we can swallow? Where is the meat? So far, no meat on the bone. They're showing to us. What is your opinion on their economy and GDP? Well, great comment there, Bear. First and foremost, the way the political system is structured in China, the Communist Party, to be able to be in power, they have the need to make the economy grow, right? So that's the only way that they can actually stay in power. Now, they're reluctant to let their economies be more open to capital flows. So the Chinese economy, it's not related only to their stock exchanges. As I said earlier, the stock exchange, it's really a small portion of the global Chinese economy. What makes the Chinese economy strong is mostly the real estate, because real estate, that's where most people invest. That's a big chunk of the Chinese economy. So if real estate has a problem, this is where the problem is with the Chinese economy. Now, there's also a way that how China gets credit. We know have been a lot of bad loans on the stock exchanges because a lot of people leveraged too much and they lost some money with the new rules that have been added. Bad loans when they stimulated the economy in 2008. There were so many companies that took some loans that went sour. So that is also a problem. So with the official data, the central bank said those bad loans they'll be able to tolerate them because they have enough reserves to tolerate those bad loans if ever it should go bad. But Chinese investors have also looked at shadow banking. So it's a system where they can lend money, but that's not something that the government can see because it's shadow. So their Chinese economy, I would say it's really complicated in that sense. Do I think that the Chinese economy will continue to grow? Yes, I believe it will continue to grow. There's still 1 billion people. There's still a spending on infrastructures. The government still have some strong reserves. So they have the resources to continue to stimulate the economy. Now it's up to actually adopt more reforms to be more to play in the big leagues, to have a capital market where you can easily get money in and get money out. But if you do that, of course, that's going to create so much disruption in the stock market, and the Communist Party won't like that. So this is actually the chicken and egg dilemma that we have here on the Chinese economy. I'm personally bullish in the long term on the Chinese economy, but I think that in the long term, Chinese economy is going to be more mature. So instead of going at 5, 6, 7% like it is doing right now in the second quarter, I think we're more going to see some 4, 3, 5% to be more like some kind of a developed economy's growth, normal growth rate for the Chinese economy. So this is actually what I expect, and I think we should see if the Chinese consumer can continue to consume more. This is also something that we need to see that could actually allow the Chinese economy to continue to do well. And Apple, they're bullish on the Chinese consumer. So for me, the Chinese consumer continues to be rich, and I think that definitely Apple could benefit from that. So overall, I'm mostly bullish on the Chinese economy, but I think it's normal that we have those disruption when a country has just tested how the stock market is, because it was not like that years before on China. So folks, really today it's a moment I think to better stay on the sideline. Our best day trade of the day, as I've shown you, is that stock here, Vitae. You have to be quick to take some profit if you got in within those 2 entry points on that stock, because now we're seeing a wave of sellers coming in into a stock like that. In terms of our market and our analyst choice portfolio on marketgurus.tv that you can have access for free for 10 days, the only position we got rid of is that stock here, a Chinese stock, especially with the rally that we have seen in the Chinese index. Well, that stock has reversed its downward trend, so we decided to close that short position. So that's it, folks. See you tomorrow at 12:30 on the Swing Trading Show on DecisionPlus.com.